Hi, good evening, Neil Yahn. This is thetaxjournal.com. This is, for purposes of accounting 452, an illustration of the Section 248 election. The 248 election is taken from Section 248 of the Internal Revenue Code of 1986, as amended in the regulations thereunder. What I've done here for you is I've provided an illustration with regards to the $5,000 immediate amortization of organizational expenditures, subject, however, to the what we'll call the special $50,000 rule. And by that, the best way to explain the $50,000 rule is via this illustration. So let's say in this case we have ABC Inc. It's a new corporation, and in fact it formed and incorporated on July 1st of 2007, which is when it started business. And ABC Inc., then, being a calendar year taxpayer, will finish its first year on a short year, but it'll be 6 months. So on December 31st of 2007, it had $51,000 of what I'll call qualifying organizational expenditures. I'll defer to Section 248 of the Code and you to look up that section to fully appreciate just what expenditures qualify. Now, with that said, for every dollar that the organizational expenditures exceed $50,000, it reduces the immediate $5,000 amortization dollar for dollar. So in this instance, we have $51,000. We are $1,000 over the $50,000 mark. Therefore, where you would typically have an immediate amortization of $5,000, it's reduced to $4,000. We then will take the balance, which is the $51,000, reduce it by the $4,000 that we have here, and divide it by 180. And you say 180, well, what's that? That's the 180 months that you're going to be able to amortize the organizational expenditures. So, what's 47,000 divided by 180? It's $261. And that means each month, $261 will be amortized over the life of this corporation for the next 15 years. You ask then, okay, well, for the first year, how much is it going to get? Remember, it started July 1st of 2007. That's 6 months. So $261 times 6 gives you $1,566. Remember, we have to add that to the 4,000 because it's 4,000 plus. 51,000 minus the 4,000 divided by 180 multiplied by the 6 months, which gives us $5,566 that ABC Inc. is going to amortize the first year. An important note that I need you to at least focus upon, that is, I referenced to you the $50,000 special rule, that for every dollar it reduces the amount that you can amortize on that $5,000 the first year. So if this number was $53,000 of organizational expenditure, what would you think then this number would be? Well, you are then $3,000 over. You would only be able to have $2,000 of immediate organizational amortization, and then the balance would be over the 180 months. If you have any questions, email me. But this is, from a standpoint, a simple, brief explanation of how the special $50,000 rule comes into play with the Section 248 election. Thank you, and as a footnote, I apologize, my voice is hoarse, I've been ailing. Thank you.